Welcome back to the channel, guys. Today's update is on stock markets and on cryptocurrency. Over the last few days, we saw the bounce come in from all of these markets. However, we're looking for specific price targets for the markets to overcome in case of bull traps. So we'll look at those exact prices on each of the charts. Make sure you smash the likes, subscribe if you haven't already, bell notification icon. What is a bull trap? Bull traps occur when buyers fail to support a rally above a breakout level. So that's the price I'm going to look at on the chart today. The breakout level, my GAN 50% level. And if the price can't remain above this level, then we could consider it a potential bull trap. So for the NASDAQ, we've been watching this fall 18%. That's from the all-time highs. Now, a 50% level is from the current low, and so I'll have to readjust this if the price continues to fall further, and that'll give me a different 50% level. But for now, while this low continues to hold, 50% is at 15,244. So essentially, if this market, the tech sector, can recover to this point, maybe it gets a V-shaped recovery. As you know from yesterday's video, I don't think that is going to be the case, but we could get a nice move up and the consolidation above this 50% level. And you can see there's going to be some resistance here. There's previous highs and some previous lows that were put in before the market broke down quite quickly. And this is going to be pretty similar across the other stocks or the other stock markets, but obviously the price is going to be slightly different. So for the NASDAQ, we're looking for 15,244. That's going to give me some confidence that this is a short-term downtrend for the NASDAQ. But overall, my position at the moment is still that probably quarter one, potentially quarter two is not going to be the best. It's going to be volatile. It's going to be shaky. But for now, that's our bounce. That's our price for the NASDAQ. For the S&P, we only dropped 12.3%. And if you want to see how we're putting on these 50%, magnetize it to the low, to the top 50%, 4,520. You can see there's going to be some resistance again here. You can see the lows come in December, more around mid-December. So I think if this market does move back up, it's going to be some sort of resistance. So we want to see it break and then consolidate above to then move to the next higher prices, the next levels, which we could see coming in as potential resistance. To the downside, we're still a long way from any of the trend breakdown levels. The next price I've got is 4,014, and from that point we could go as far back as 2,700, but one step at a time. Let's see if we can at least bounce to this point and get above this level and hold within a nice high range for this first half of the year. That's not going to be a problem overall. Maybe we've seen the majority of the drop already, like we've seen in the past. Sometimes the markets move quite quickly down. We go sideways for a period of time and then we start to move out. Have a quick move down. This was the V-shaped recovery in late 2018. As for the Dow Jones, down 10.3%, 50%. So the halfway point, the level we want to see it get to start to accumulate above to bring some bullishness, some strength back to the market, 35,051. So while all these markets remain at this current point, they've bounced off some previous support. They may have bounced off 50%. They're now looking to that next stage. Can we come up and test some of the higher numbers again? So can we come up and test where we just broke down from? So if we break down from that, you'd probably expect lower prices, but not to say that's going to happen extremely quick. It just might take some time to break down from those levels because we've gone up and tested those prices. Market doesn't like it. It's going to throw some more supply at it, which will then drop the price down. However, if we come up to it and break through, then of course it just means that the market is ready to take off again. The supply has been absorbed and the market is looking ready to at least accumulate above higher levels. That's why we keep a close eye on the stock markets and everything else that's going on in the economy at the moment. Of course, today, 26th, the Fed is looking to meet, so we'll know that answer shortly. In terms of cryptocurrency, the fear and greed has jumped a lot. So we had several days. We had 4 days down underneath our 15 or lower. So we had 13, 11, 12, 13 and 12, sorry, and then we've jumped to 23. So we've done a few purchases here on Bitcoin going back over the last few videos. We'll continue to update that as well. As for Bitcoin, the number I'm watching is 38,222. Now remember, 36,000 was a very significant level. It's the major 50% level from the all-time high to the cycle low. And on a daily chart, which is a reasonable time frame for crypto, you can see a lot of the price action has worked itself out around the $36,000 level at the moment. Now, some people say, well, the lows are down here. It doesn't matter. Look at where the closes are. You had one close under, you had a close above, another close above, another close above. So the market is finding a lot of strength around this level at the moment. If I drop it back onto a very short time frame, 1 hour chart, you can see the market has played with that line so much. Now, this 36,000 level was drawn back from when we had the all-time high back in mid to late November, and this 36 is now playing with the market at the moment. So at least for the short term, the way I see it is we are finding some strength, and it looks like we want to test the next level up. And you can see there was a bit of work here done on the way down at 38. So let's see if we can get above the 38,200 level to start to consolidate and then test the upper trend line. And that trend line is this blue one here, which is the downtrend from the all-time high in early November, connected to the $52,000 level, which was in late December, and has had a beautiful hit on around the 21st of January. So that's going to be the next stage as well. We've got a lot of overhead resistance. You can definitely see underneath that 40,000 level a lot of climbing to do out of here, which is why I think we're going to be at these levels, or at least being volatile for quite a period of time. You know, it doesn't matter where it is. I think you're probably seeing somewhere around low to mid 40s, and then anything beneath where we currently are. I don't think this is going to hold up long term, like I've talked about in previous videos, but at least for now, it's looking like a reasonable bounce level, and let's see if we can test it. And then hopefully I'm wrong and we never come back to test 33,000 if we are long-term holders and looking for the moon prices on Bitcoin sooner rather than later. I do my chart analysis every single morning, and there was a huge error that I remember back from my early days, back in 2012, which may help some new investors at the moment. There's a lot of people interested in cryptocurrency, and of course there are now crypto stocks, things like Robinhood, Coinbase, MicroStrategies, all these stocks which are tied to cryptocurrency in one way or another. Now, the mistake I made back in these early days was trading gold and silver at the same time. It's essentially putting all your eggs in the one basket. Now, I'm bringing this up today because as we're at lower prices, I'm noticing, or at least seeing, a lot of comments from people saying how much they're going to at least try and throw at cryptocurrency and pretty much not diversifying themselves around this space. It's sort of going all in on a lot of shit coins and not really diversifying themselves, even though we're all pretty much in crypto at once. Take it for what you will, maybe use it, maybe don't. But essentially, I was lucky in this case. I was trading gold at this time in August of 2012, and you can see there's a nice little pattern here forming. I was looking for my triangle breakout, and I got the triangle breakout, but I saw the same pattern on silver. So I was trading on silver as well and throwing a whole lot of money at both. Fortunately, in this case, I got away with it. I saw my triple bottom, the market break out. Eventually, I got my profits because I was trading short-term timeframes, and then the market basically dumped from that point. So I wasn't buying the physical, I was actually just trading it. And I can see this happen in crypto and in stocks. So the stocks were very hot at the beginning of the year. Stuff like Coinbase, which is now down 62%. It's broken its all-time lows that was set from May and had a few bottoms here, and then also a recent bottom in early January, and it's broken through this low. So that's a very, very weak sign at the moment. It needs to get above those levels quite quickly. The other crypto, which was extremely hot at the time, or in August, was Robinhood. And now this is down nearly 87% from all-time high to all-time low. It had a slight bounce this morning, but again, that's 87% down. So it's not a matter of diversifying between crypto and stocks. It's a matter of diversifying between sectors. And these are all in a similar sector. If crypto goes down, you're probably going to expect that these are going to go down too. So the entire portfolio can get wiped out, and that will play really massive havoc on a new investor's psychology, the emotions, the mentality of how to tackle the market moving forward. So just keep that in mind moving forward, depending on how you're looking to invest. Of course, not financial advice. You can do whatever it is you want. It was just something that I remembered back from my earlier days, and I try not to make that same mistake again. How do I avoid it? Well, I'll have those two different portfolios. One is going to be trading, so I am still heavily in one sector, being cryptocurrency, but I'm not looking to hold these things long term, and each of the cryptos have almost different cycles. Some are going to pop off earlier than others, and then I'll also have stops to protect myself, which luckily for silver and gold, I had stops to exit at a profit, but then also stops underneath to both exit. So my losses just would have been multiplied double, silver and gold, if I had got stopped out. So keep that in mind for your portfolios. You might have a hodl and a trading portfolio. Make sure you've liked, subscribed. Let us know if you enjoyed that little bit of alpha knowledge drop I put at the end in terms of my own experiences in the market. I'll see you guys at the next video. Until then, have more fun to get more done.